Welcome to a new video here on the Tradeciety YouTube channel, and in this video I will show you how to pick the best trading strategy, how to pick the best indicator, how to put it all together, create good rules, and everything that you need to be aware of when it comes to creating a good and professional trading strategy. So I have prepared something here already, and I will go through this step by step with you, and then at the end of the video you will know how to create a good trading strategy and what is important. So let's get started, and here we have a normal market cycle with different market phases that pretty much any market, whether you trade Forex, stocks, Bitcoin, I'm not too sure, cryptocurrency follows its own rules at the moment, but pretty much any market goes through. So this is very important to understand. And when it comes to picking a trading strategy or improving a trading strategy, then this should always be your first step. So we are starting here often with a range market before we have a trend. So we have here either you can call it a range, or you can call it a consolidation. Then at this point, we then eventually break out if we have good momentum. And don't worry, we will put it all together later in the next step when we look at the indicators, and then we will create rules around all those market phases, and then everything will make more sense. So after the breakout, we then often have an early pullback, and then we have here a retest, or let's call it a pullback here for just the sake of this video. Then we have an early trend here. We have small consolidations during the trend. So the next phase here, early trend. Then we have small consolidations in between the trend waves here. And then at one point a trend matures. So we are in a late, or you can also call it a mature trend. And then here at the top, you have again your range or your market top, whatever you want to call that. And then here the same repeats itself to the downside. We have a breakout. Then we have a pullback here. Then we have an early trend and late trend. We have small consolidations with pullbacks, consolidations, breakouts, and so on and so forth. So you can see those pretty much describe the basic trading patterns or the market cycles, the different phases during the market cycle. And now that we have this, we can look at the indicators that we can use. Because you cannot use the same indicator across all the market periods and market phases. And this is a big problem that many traders have. They just pick one or two indicators and then they try to apply it across all market phases and all market cycles, and obviously that is not possible because the specific indicators are built for specific purposes. They analyze different things like momentum or breakout momentum. You have oscillators, you have momentum indicators, you have chart studies. So there are many different tools that you can choose from, and every indicator and every tool has its own way of analyzing charts and analyzing price action. So it's very important that you know the different market phases and which indicator can be used for the specific market phase. So that's the next step here, and we will get into this. So when you have a range market or a consolidation, there are a few things that you can use, obviously. So very famously, people use support and resistance, just horizontal barriers, as we can see here. You can also use oscillators, because when we want to trade here the consolidation, we can just go to the lower time frame, and then the range behavior and the range waves on the lower time frame, they will become much more clearer. So you can use horizontal support and resistance. You can use oscillators here to identify the swing points and the turning points. So oscillators are a very great tool here as well. And so this is typically what you use during a range market or during a consolidation. You don't use things like moving average, because moving average during a range market does not make any sense. The moving average in a range will always be somewhere around the middle and not provide any meaningful help. Then during a breakout, what you can use are momentum indicators, such as the RSI, for example. You can use the MACD. You can also, of course, use the support and resistance here to define the breakout moments where then the price breaks through a support and resistance level, also very helpful. Then we have a pullback. Pullbacks are usually used as well. You can use support and resistance. You can also use moving averages. Many people who trade moving averages, they use the famous moving averages. They then wait until price comes back into here such a moving average on the way up or on the way down, then they buy the dip, they buy the pullback, and they try to get into a trade. Then we have early trends. Early trends also follow momentum rules, obviously. So you can use momentum indicators. You can use a MACD. You can use trend lines. You can use moving averages. Obviously, during trends, moving averages work great during trends. Also a good tool then to have. Then again, consolidations, what we have said already. You can use horizontal support and resistance. You can use oscillators, again, to define those trend waves and to look for those swing points in those trend waves. Then you have late and maturing trends. Again, the same rules apply for early trends. If you are in a trend, you can use any momentum indicator. There are MACDs. You can use an RSI indicator. You can draw trend lines to define a trend. You can use a moving average during the trend. So those are all apply here. Then you have a market top. During a market top, you can use things like a divergence indicator. So if you use a MACD or an RSI, it does not really matter. Or even a stochastic, you can use any type of momentum indicator to look at divergences during a market top. You can use chart patterns, which I like to use, such as the head and shoulders is a very good one. You can also use, obviously, support and resistance. Also works great here during a market top. And you can use trend lines and many different other things. Then here again, we start here our downward trend here after we break out. Again, we can define the breakout point. We can look at the RSI indicator. If the RSI is rising during a breakout, we have a good chance that the breakout will be successful. We can use momentum indicators also, like the MACD. A high and rising MACD during a breakout is usually a significant signal. We can look at support and resistance during a breakout, and so on and so forth. So you can see, so this is usually the market cycles with the different periods, and that is the first step. So the first step, very important, is that you really try to understand what type of trader do you want to be, because you really have to specialize, at least in the beginning. For the first few years, you should pick your market phase. You should really try to narrow down, pick your niche in trading, pick your one thing that you try to master, that you want to trade. And for me personally, I have done this a few years ago. I have specialized in one thing only. I am what you will call maybe a reversal trader. I would call it maybe a market top trader or an early trend trader. So anything that is between here, we have a market top and a breakout. So I specialize in this area right here, where I catch new trends very early on. When we have a breakout here, I can get into new trades around here or around here very early on, and then ride the new trends very long. And this is a decision I made a few years ago, where I picked one specific thing. I wanted to become the best a possible reversal trader or breakout trader, whatever you want to call it, does not really matter. But I was very clear about the trading strategy that I want to have, that I want to be, that made sense for me. And then I blurred out all the other stuff. I'm not looking at mature trends. I'm not looking at consolidations. I'm not trading pullbacks at trends. I really only look at market tops and those very early breakouts and the very early trends. That is very, very important. So step one, you define the market pattern that you want to trade, or the market cycle. So the first step, now you have to become clear, what type of market phase do you want to trade? What type of system do you want to then build around that? Then step two, you choose your trading tools. What tools do you want to use? This is very important. So for me personally, because there are different types of market tops and breakouts, and that's also the beauty of then, once you specialize in one thing, is that you understand, okay, even though I trade the market top, the breakout and the early trend, there are different types of breakouts of market trends. They are not always the same. Sometimes you have a very orderly breakout, sometimes it's very messy. So you can use different tools for different market tops, and you will learn those patterns once you specialize in trading only one thing. So me, for example, I use Bollinger Bands, I use the trend lines, I use a moving average, I also use support and resistance. Those are pretty much the 4 different tools that I use for different types of market tops, different types of breakouts. And this is something that you will only learn once you really become more focused on one thing only. You don't try to understand all the market situations, all the different market phases, because then you will get just overwhelmed. Or another problem that many traders have is that they say, okay, I want to use a moving average and I want to become a moving average trader. But what does this really mean? So you use a moving average during ranges, it does not work. You use a moving average during consolidation, also does not work. You use a moving average during market tops, it does not work as well. So the only time you can really use a moving averages are during pullbacks maybe, and during trending phases. But this is something that you have to become aware of. So instead of saying I want to use a moving average and I want to become a moving average trader, you have to understand what does this mean for your trading strategy, because then once you say you want to use a moving average, then you limit yourself to a very specific set of market phases. And this is something that it takes a little bit of time to understand and some experience. But once you become clear about those types of concepts, then it will make more sense. So step 3 then is that you define the time frames. Because it does not matter what time frame you follow, you can always see those market phases, the cycles, or it doesn't matter what time frame you use, but you have to pick 1 or 2 time frames. You cannot be all over the place. You cannot trade all the time frames because they require different types of personality and different type of mindset, and also different approaches. Volatility and momentum, and also the decision-making speed. It really depends on the market time frame, and it changes across time frames a lot. So for example, I like to trade the 4-hour and I like to trade the daily chart. I sometimes trade the 1 hour, not that much anymore, and not across all the markets, but it's something that I chose for me. I know other traders like Moritz, he likes the lower time frames. He has his day trading strategy on the 5-minute, on the 15-minute time frame, and that's something that works for him. It does not work for me, but it's something that you also have to understand, and that is something that you have to take into consideration when choosing or building your trading strategy. So now we have a good approach, or we know where we have to go. So we define the market phase, which pattern or at which stage do you want to trade, what type of trader do you want to be. Then you define your tools, and then you have your time frame. Then we can slowly start putting it all together. So you have your rules, and that is something that I really like when I did, or I'm still doing it today. When I analyze my trades, I have very specific type of rules. So when I get into a trade, I have my checklist, I have my things that I'm looking for. Rule 1, rule 2, rule 3, and so on and so forth. I have all the different signals. And then I check it off, and then I enter it in my trading journal. And so over time, with very specific rules, I can analyze what works well, what does not, and then this allows me over time to improve my trading process and my trading strategy. But it is very important that you have rules to start with. You don't just pick a moving average and let's say a time frame, and then you just apply, or you take random trades, and then your results will be all over the place, and that is not a good place to trade and operate from. So you need very specific rules that define your trade entry, the way you place your stops, the way you manage your trades, and how you exit those trades. So that is very, very important. So you need rules for all of those 3 or 4 phases of your trading. Entries, again, stop loss, take profit, trade management, and also trade exiting. So 5 things that you need to be aware of. That's then your rules. And then the fun part probably for most of you is you start trading. So this is something that you have to do first, and then finally, once you have that, you can start trading. You can look at markets, you can follow your signals, your entry signals, you can start taking trades, and then over time, once you have such a consistent and such a repeatable process, your results will also become more consistent. Of course, this does not matter that suddenly you will become profitable just because you have followed this process, but it means that your results become more consistent. They're not all over the place, so it makes analyzing your results and your trading much more easy and much more effectively, which is the key here. Once you can analyze your trading performance and your trades when they are consistent, then you can see patterns in your trading. What works well, which rule does work well, what type of top do you like to trade, or what is the real your real niche, what makes a lot of sense from you, because traders look at charts differently. Some traders like to trade those mature trends, some like to trade consolidation. So once you have this mindset of really following your rules and having this same approach day in and day out, you will become more aware of yourself, more aware of your trading, more aware of charts in general and price action, because you're not all over the place, you're not trying to chase random signals. So this is then all how this ties in together, how you build your own trading strategy, how you find what works for you, how you pick your trading strategy, and so on and so forth. I hope this helps, and now you're ready to tackle it on your own. I hope it gave you a few ideas and some inspiration how you can apply those concepts in your own trading. If it did, leave a comment below in this video. If you would like to trade with me and use my own personal trading system with all the defined rules, I give you everything step by step, from the time frame trader trade with all the exit entry rules, the markets, how I define different phases. Then check the link in the description below to our pro and premium membership and a premium course where you can trade and learn with me personally. And otherwise, I just wish you all the best. Make sure that you use it, leave a comment below if you have any questions, and let me know how this goes for you. Until the next time, thank you for watching and happy trading.